Hello, everyone. This is Rick Hopkins, best-selling author and president of RH Consulting. Now, tonight's training is on the 3 steps to financial success. Now, most of you don't know me, so I'm going to tell you a little about myself. My story is not unique. I just wanted to live comfortably during my working years and be able to retire someday without having to lower my standard of living. But that dream was shattered when an unexpected, bitter divorce wiped me out financially. Financial problems and debt soon followed. It looked like I was going to have to work a job until the day I died. But at my lowest point, a mentor came into my life and helped me understand how money really works in America. And by focusing on proven financial strategies, I could get back what I had lost and more. Now today, I'm back on my feet, 100% debt-free, and looking forward to retirement again. Now first, let's start with understanding money. Now there are 3 ways that money is made in America. 1, by W-2 or job income. 2, by 1099 or business income. And 3, investment income. Now each has its own advantages and disadvantages. Now the trick is to strategically minimize the disadvantages and maximize the advantages of each. So let's break it down. W-2 income has lots of positive advantages. It provides you with a steady paycheck, benefits, and the security and self-esteem of being employed, having a job, being able to provide for yourself and your family. But on the other side, it pays the highest taxes of any of the 3 forms of income. And it has the fewest tax deductions. Now, 100% of job income is taxed up front, and you'll see as we go through this process, that's a big disadvantage. 1099 income. Now, it's taxed after expenses, and that's really big. A simple example, an oversimplified example, is that if you earn $50,000 with a job, no matter how much you spend, you're going to pay tax on all $50,000. But let's say you earn that $50,000 in 1099 or business income, and let's say you spent $40,000 of that. Well, that $40,000 can be written off against your revenue, leaving $10,000, and that's what you would pay taxes on. There's a big difference between paying taxes on $50,000 and on paying $10,000, even though you pay the exact same tax rate. Now, another advantage of 1099 income is that you get lots of tax deductions, over 400 last time I counted. And it gives you access to leveraged and residual income, and we're going to spend some time talking about those later. On the downside, nothing is guaranteed. Now, some people don't function well in a risk environment. Business is risky. Sometimes you make money, sometimes you don't. If you're used to having that paycheck every 2 weeks, every month, guaranteed, the same amount, you know what's coming, that's where most people are. But there's an advantage to being able to generate more money when you need more money and to get paid for what you do. Investment income. I mean, what can I say about investment income? You're not doing the work, your money's doing the work. Your money is making money. And there's no disadvantage to that. Next, we're going to talk about a concept called income shifting. Now, income shifting is strategically moving money from one income stream to the next while maximizing the benefits and minimizing the detriments of each. Now, in phase 1, the very beginning of the process, one of the first things I have my clients and my business partners do is to adjust their W-4 tax withholding form at work. 80% of people fill this out incorrectly, and that causes them to overpay their taxes. Now, we all complain about paying high taxes. Then why would we also overpay taxes unnecessarily? Now, you can create new cash flow from tax savings. If you're getting more of your money back in your paycheck, that gives you more money to pay bills, pay down debt, and invest. That is actually a new form of cash flow that you just created because it's money you previously were just giving away. Now, you can apply that tax savings to credit card or other debt or to investments. Now, as you move into phase 2, you learn to create new cash flow from your debt once you've eliminated it. So you've saved money on taxes, that's cash flow. You've eliminated debt, that's more cash flow. Then you want to begin to build business income, build that 1099 income. And to do that, you need what I call a strategic business venture. And again, we're going to cover that in detail a little later. In phase 2, you begin to earn 1099 income and claim business tax deductions. I mean, that's more than just the money you didn't claim on your W-4. These are now deductions that you generate through your everyday life, through your expenses that you have every day. You turn those from negatives into positives. In phase 3, now you're starting to get the hang of it. You're beginning to combine your cash flow from your tax savings and your debt elimination with cash flow from your SBV tax deductions. Then you combine that cash flow with your 1099 income. So you put all those things together, and now you're beginning to generate cash flow. You're beginning to create wealth. Everyone knows we need to invest. But the question always comes, where do I find the money to invest? I'm barely getting by now. In phase 3, this is where you find that money. So as you move into the next phase, which is called cash flow success, you've minimized your taxes. You've eliminated your debt. You've freed up money to invest. You developed an emergency fund of semi-liquid cash to be able to handle things that come up when your money is tied up in investments and other things. And you fully funded your retirement at work. So if you can get to that point, I think you would feel pretty happy with yourself. You'd be feeling like this is the kind of life that I want to live. So that's what we're trying to get you to. So let's briefly go through the 3 steps to financial success. Step 1 is create more money from the money you already make. Now here's a common sense example. When you buy a dozen eggs at the grocery store, you expect to take home 12 eggs, right? And if you get home and find you only have 8 eggs, what would you do? Now, would you say, well, 8 out of 12 isn't bad, or I really didn't need all 12 eggs anyway? I doubt it. I think you'd go back after those eggs. Now, your paycheck is much like that carton of eggs. A big chunk of it never makes it home. Now, you lose 1/3 of your income to taxes and another 1/3 to debt. You're in debt for trying to compensate for the money you lost to taxes. It's like a vicious circle. Now, it's tough trying to live on only 1/3 of your income. No wonder you're broke all the time. This document, the W-4, is the key to beginning the process of making more money from the money you already make, from taking back money you're unnecessarily paying in taxes. And the W-4 is your employee withholding allowance certificate. The key word is allowance. People don't really understand what an allowance is. They think an allowance is the same thing as a dependent. They claim 3 because, well, it's me and my 2 kids, or it's me and my husband and a kid. That's not the same thing, and we'll explain that to you later. The W-4 can be a payment gateway. The W-4 tells your employer how much tax to withhold from your paycheck. You tell your employer what to withhold, not the other way around. Most people don't understand that. If used properly, the W-4 can serve as a payment gateway. Much more timely and efficient than a refund check. With a refund check, you have to wait till the end of the year. You let Uncle Sam keep your money for a year, then give it back to you without paying you interest. Now, that's not good business. Step 2, turn everyday expenses into write-offs. Now you're starting to get into it. Now, to do this, though, you need what's called a strategic business venture, or an SBV for short. A strategic business venture or some other part-time business is required to execute strategy number 2. Now, a W-2 employee gets very few tax deductions. A business owner gets over 400. An SBV allows employees the same tax advantages as a business owner. But what if you don't want to run a business? Well, most people don't. That's why the SBV is the solution, because it's not like running a full-time traditional business. An SBV is a part-time business that you run when you have the time and energy in your busy schedule. 3 to 4 hours a week is really all it takes to qualify for the government benefit. Now, the SBV makes possible my favorite financial strategy, the sword and shield. Now, allow me to set this up for you a little bit. I want you to visualize yourself as a gladiator back in ancient times, the Colosseums, gladiators, the crowds, all that stuff. Well, each gladiator had a sword and a shield. He needed both of those things in order to survive. So I want you to think about your job as if it was your sword. It's your primary weapon. It's your primary source of income. You depend on your job like that gladiator depended on his sword. Now, your SBV is your shield. It protects your income from excessive taxation, just like the gladiator's shield protected him from the swords and the danger of his opponent. Now, the SBV lets you write off everyday expenses, like meals and entertainment, cell phones and electronics, auto mileage and travel, equipment, furniture, utilities. All these things can be written off against your SBV if you follow the rules, document, and get a good strategy in place. So step 3, get paid from work done by someone else. Now you're moving into the big leagues. Now you're into generating money. Step 1 and 2 was more about saving money on taxes, saving money from debt you're paying out on credit cards, other interests. It's about really playing defense. Step 3 is about playing offense. It's about making more money. And it's easier to make more money with other people than it is to do all by yourself. Now, you show me a wealthy person, and I'll show you someone who gets paid from the time, talent, labor, and resources of someone other than himself. Now, this is how your boss can spend so much time on the golf course and still get paid. He leverages you and your coworkers back on the job, putting in work. Now, my other favorite form of income is residual income. Now, a wealthy person also gets paid over and over again for work done just one time in the past, without having to do any additional work today. Now, a good example is your cable bill. Now, you only sign up once, but you pay that bill every month, regardless of if you use your television or not. Now, you represent the cable company's residual income. The company doesn't come to you every month and sign you up again for cable. They just did it that one time, but you pay again and again and again. They can take that time they would have spent getting it from you again to get paid from someone else. That's how they begin to build residual income. So the SBV in action, it seamlessly pulls together the 3 steps to financial success. It helps you to pay less in taxes, get out of debt, and free up money to invest. Now, it's not just about making more money. It's about making less of the money you already make taxable. So now it's time to act. The secret sauce that makes all this work is that strategic business venture. And I can help you design, set up, and operate your very own SBV. Now, financial success is just 3 steps away. The first step is to join my team at www.sbvforme.com. That's www.sbv, as in Strategic Business Venture, sbvforme.com. This is Rick Hopkins, and I wish you the best in financial success.